Good morning, Jaginder Rana here. And the topic of the day is nomination in a life insurance policy. Nomination in your life insurance policy. A life insurance plan involves two parties, the policyholder and an insurance company. So it's a financial agreement where the insurance company guarantees to pay the nominated person on behalf of the policyholder called the nominee. Due to the demise of the policyholder or after a stipulated time period, meanwhile the insurer or the policyholder has to deposit a predefined amount to the insurance company till the specified time. So this amount will be received by the nominee after the end of the tenure of the policy or after the sudden death of the policyholder. There are three parties in some contract where the life assured is not the buyer of the policy. Maybe some children is covered under the policy. So in that case, there could be three parties to the insurance agreement. So now the question is, what is nomination? Nomination is the process by which the policyholder appoints a person or persons to receive policy benefits in case of a death claim. So in case of an eventuality, the life insurance company pays the policy proceeds to the appointed person called nominee. Now nomination is the process of anything or authorizing a person or people as a nominee in a life insurance policy to make sure that he or she receives the sum assured if the policyholder passes away during the policy term. So the policyholder can select any person for nomination. However, it can be noticed that most people nominated a close relative. Because the nomination rules are governed by Section 39 of the Insurance Act 1938. Now the question is, who can be a nominee? Basically, a nominee is appointed by the policyholder and can be anyone to whom the policyholder wants the financial benefits to accrue in case of his or her death during policy tenure. Now, general practice is to appoint spouse, children, or parents as the nominee. Earlier, due to lack of regulatory clarity, there were confusions about the actual status of nominees, as legal heirs other than nominees too used to make claims on the money. To solve this problem and to ensure that the insurance money goes to the real and intended recipients, a concept of beneficiary or beneficial nominee was introduced in 2015. So beneficial nominees, as per the new law, if any immediate family member like a spouse, children, or parents is made the nominee, then they will automatically become the beneficial owners of the claim benefits and be referred to as beneficial nominee. This means that the death benefit will be paid to beneficial nominees and not to any other legal heirs. So irrespective of anything. So it is worth noting that only life or only the immediate family members can be appointed as the beneficial nominees. Therefore, it is always advisable to nominate an immediate family member as the nominee to ensure that there are no disputes in future between the nominees and the legal heirs. There could be minor nominee also. It's a normal practice for people to appoint their children as the beneficiary of their life insurance policies. And rightly so, after all, it is their future one wants to secure, even if one is not around. But children who are below the age of 18 years of age are not considered eligible to handle claim amount. Hence, the policyholder needs to assign an appointee or custodian. The nominee is decided by the policyholder. In case of claim arising when the nominee or child in this case is younger than 18 years, the claim amount is paid to the appointee for custody till the minor turns major. And in case of non-family nominees, this might sound strange. Why would you want to make a stranger or non-family member as the beneficiary of your life insurance policy? So this oddity is exactly what leads insurers to not accept strangers or non-family members as nominees. So even though one can nominate distant relatives or even friends, fact is that it will be very difficult to prove insurable interest. This, along with the fact that there is a moral hazard in appointing such a nominee. So the insurance company might refuse the nomination or might ask the further explanations. One should make sure that nomination of something as important as life insurance is up to date and in sync with whom policyholder actually wants to appoint as the beneficiary. The policyholder can change the nominee as many times as he or she wishes, but the latest nominee supersedes all previous ones. So given the real purpose of life insurance, one cannot overstate the importance of appointing the right nominee. Therefore, ensure that you have the right person as your nominee. This will ensure that possible future disputes are avoided and the money is paid only to those whom you want. What happens if to life insurance policies without a nominee? Life insurance products are designed to provide financial security to the dependents of the life insured. However, the absence of proper nomination does exactly the opposite. In case of demise of the policyholder, their dependent may have to run from pillar to post to claim the benefits. So increased paperwork only delays the process and increases the hassle. In the absence of a proper nomination, the real beneficiaries are determined by various factors. Generally, insurers pay the claim amount to class 1 legal heirs such as son, daughter, widow, mother, etc. If you have a will, then the proceeds will be distributed as per the wishes that have been stated in the will as per the Indian Succession Act 1925. Alternately, the insurance company may also ask for a succession certificate from the court of law which will state who should receive the claims. So gaining succession certificate from the court is easier said than done. Your dependents need to go through a lengthy legal process and a lot of hassles to obtain this claim. So in some cases, especially when there is more than one legal heir, the insurance company may ask for joint discharge statement, waiver of legal evidence, and an indemnity bond to safeguard relevant parties' interest in case of any dispute regarding the settlement of claims. In short, the absence of nomination can lead to devastating experience for your family at a time when they need empathy, for love and support. So thus your small effort and diligence today will save tons of efforts for your loved ones in the future. What happens in case of nominee's death? If the life insurance nominee dies before the policy term is over, the insurance company cancels the nomination. In this case, the policyholder needs to submit a new nomination to assign a person who will receive the policy benefits. So one thing that is to be recommended is that the nominee is eligible to receive the money only if the policyholder passes away before the policy term ends. So in case the policyholder outlives the policy term, the insurance company pays the maturity benefit directly to the policyholder. So the proceeds to make a nomination and insurance can be made when the policy is bought or at any later point during the policy tenure. So if you want to nominate someone at the initiation of the policy, all you need to do is to mention the same in your policy form. In case you want to add the nominee later, you have to update it in policy bond and sign it in the presence of a witness. It is person who can be trusted with the money. This is why it is advisable to nominate a close family member. What happens to your nominee if you assign your policy? When you conditionally assign your policy, it shall cancel the nomination till the time the assignment is in force. So when you absolutely assign your policy, it shall automatically cancel the nomination. Exceptions are the nomination shall not be cancelled when you assign your policy to the insurer for taking a loan, against security, or on reassignment of your policy after repayment. So in these cases, the nominations will get cancelled to the extent of the interest of the insurer to assignee in the policy. The nomination will get revived on repayment of the loan. Now, what are the new rules? New rules favor insurance nominees. According to recent changes in Insurance Laws Amendment Act 2015, if an immediate family member such as parents, spouse or children has been made nominee, then they will be known as beneficiary nominees. Beneficiary nominees are entitled to all insurance benefits in case of an unfortunate incident. It means that the insurer will pay the assured money only to the beneficiary nominees, and the benefits will not be distributed among other legal heirs. So in the new laws, the rule of assignment have also been tweaked to benefit the nominees. An assignment is a process through which policyholders can transfer their rights to another person or entity. Earlier, when you pledged your life insurance policy as collateral to a bank, the bank became the owner of the policy. After the death of the policyholder, the insurer paid the sum insured to the bank, and it was up to the bank to decide on how much they transferred to the nominee. However, according to the new rules, nominee remains in case of the assignment of a life insurance policy. Thus, after the demise of the life insured, the insurer will pay the outstanding loan amount to the bank and pay the remaining amount to the nominee. So the policyholder can nominate anyone as a nominee and is not limited to blood relations. The nominees may range from friends, colleagues, business partners, etc. Buying a life insurance plan is important to secure the financial future of your loved ones. However, to serve the purpose effectively, you need to assign a trustworthy and responsible person as the nominee. Thank you. Thank you very much.